The Coca-Cola Company stock has performed very well over the last year. That's mainly because the company has been able to increase their prices and their profit in the last quarters. So this seems like a great time to take a look at the company and try to come up with a fair value by calculating an internal rate of return based on the free cash flow of the company. Currently it's trading at a PE ratio of 25 and a forward PE of 21. The dividend yield is 3%. If we take a look at the last 80 years, we can see that revenue per share remained flat. Earnings and free cash flow per share grew a little bit. In fact, free cash flow grew 5.5% annually over the past 10 years. Revenue went down 1.8% annually over the past 10 years. Now let's get into valuation. I was actually surprised to see that the number of shares outstanding has been steadily increasing over the past years. That's something I don't like to see, especially for a company that isn't growing at a very fast rate anymore. When we include analysts' estimates until 2024, we can see that Coca-Cola is expected to grow its revenue with 6.2% annually. This means they will grow slightly faster than inflation for the next years. And I think this growth rate assumption is reasonable, which brings us to our normal case scenario for valuation. In this case, cash flow will grow in line with revenue. A fair free cash flow yield of 5% already seems a little bit optimistic, but we can see the internal rate of return is only 6.2%, which isn't a market-beating return. In the best case scenario, I believe Coca-Cola will be able to constantly grow at 10%. This seems very optimistic to me, as there aren't any big changes made in the business model and their revenue remained flat over the past 10 years. But even in this very optimistic case, we would just get an internal rate of return of 10.6%. The worst case scenario looks really bad, with an internal rate of return of only 3.7%. And keep in mind that I still kept them growing at a 4% rate year over year. This brings us to our combined result, which gives us a potential internal rate of return of 6.7% at the current price. This is no financial advice and you have to do your own research and your own decisions. But I personally won't buy a Coca-Cola shares at the current valuation. Even at a price of $45 a share, the stock wouldn't be interesting to me. If you want to see a stock that I actually like, I recently made an analysis of Amazon. So feel free to watch the video and don't forget to subscribe if you want to see regular stock analysis videos.